All right, we are live for midday RTD Q&A. Excited to have a returning guest, Mr. James Anderson. He's a metals guru in of itself. He dives deep down the rabbit hole to uncover the criminality in this current precious metals rigging world we're in. And I'm excited to have you on the show because I've been following your work, as I mentioned beforehand, and you go very deep into it. I keep it on the surface. We're just telling people to get their weight up, but you give us the reasons why that is more important now than ever. So, Mr. Anderson, James Anderson, welcome back to RTD, my friend.
Hey, Mike, thanks for having me. It's good to see you. It's been a little while.
Yes, sir. But I appreciate you taking time to join us. Looking forward to getting your thoughts on all the analysis and charts and graphs and everything that shows the manipulation and really highlight the importance of getting physical like never before in this current year, especially as we all believe, I'm sure, things are unwinding at a faster pace. But let's just start off with the simple thing, silver manipulation. I think this year, the Wall Street bets, if I'm not mistaken, really highlighted a lot of the manipulation and the rigging via the paper side. Give us your analysis and your assessment on that, and we can pick up from there.
Sure. So Wall Street bets, for those out there who didn't know the story, they for a year or so have been building this position to try and get a lot of people going long in GameStop using options. And the reason for that was there was a lot of short interest on GameStop, and these guys kind of targeted that and a few other stocks, seeing them as that they were being shorted too much, and that if they gathered their arsenal and their posse together and they got their longs going with options, they could overrun the shorts, and they did that. GameStop was a real revelation, I think, for industry onlookers to know that a group of people online can now collectively kind of target something, and it's not that they're coordinated in the sense of like striking at the same hour or moment. They're all working in an asymmetric form or fashion, but they're all kind of learning together as they go about it and making their own plans. No. And so it's not prosecutable. You can't prosecute this. You can't claim it's some type of manipulation or anything like that, because it's a group that's working on their own merit, essentially. Although they do coordinate in terms of notes and memes and stuff like that, it's not in some type of highly obvious pattern that you could prosecute and say is criminality. So that's kind of led into this news section where when that happened, there was a whole bunch of people who, they have their personal favorite asset class, and they're like, hey, look at my asset class. Can we short squeeze my asset class? And a whole bunch of people went into the Wall Street Bets forum and drew up really good due diligence articles on silver. And there were people who were interested in silver for, especially in the summer when silver had run up to 30. People were excited about it and looking at potentiality of potential short squeeze in silver. And so someone ran in there at the end of January and wrote a couple of people went in there and wrote these various articles in that forum, and then took them out and went around the social media. So you saw them on Twitter, you saw them on Facebook and places like that. And so Silverbug saw them, Goldbug saw them, and they got all excited thinking, oh, wow, maybe we have some new people coming into this market. And that's essentially what happened. Wall Street Bets wanted to stay focused on GameStop. So the majority, or the mods at least in that forum, said, get this silver crap out of here. And they made up this excuse that the shorts of GameStop were also, and it's true, they also had interest in SLV, and so we would have been helping them, essentially. That's the idea. And so they just didn't want anything to do with silver. And so offshoot came where you have Wall Street Silver now on Reddit. And it's been around since the end of January. It's only been around, a month and a week or so, a week and a half, and there's already 40,000, I think, members of it, and it's pretty active. You go there every day, and there's over 1,000 to 1,500 people who are on there online live every moment of the day. So you got some pretty active young people who are excited about silver, and they're using the same sort of tactics that Wall Street Bets used in terms of social media, that going out and using a lot of memes and stuff to gather an interest of other people who perhaps didn't know anything about silver. And so that's what's happening. It reminds me a lot of the 2007, 2008 Ron Paul campaign. Reminds me a lot of that. A lot of guerrilla warfare tactics in terms of trying to get people interested and trying to get people involved and on the same board, on the same train. So
Yeah.
it's only just started, and they've already raised a lot of currency too for campaigns outside, billboards, and also other. I think what you got to use social media. I mean, the leverage of social media can give you, if you use your users, like for instance, if they create a billboard, put a billboard outside of Times Square, put a billboard outside of Chicago Board of Trade, and make the picture look really great, and then have all your friends flood Twitter or flood Facebook with the picture, makes it a lot bigger, in terms of perception than perhaps what it really is.
Yeah.
And perception is reality, as we all know, and that's the key is doing perception at a very cheap price cost per mil, and that's the idea. So it's using those funds that they've raised effectively. There's a whole variant. Most of the people are young, but some of them are older, and there's a whole bunch of leaders there who are pretty intelligent. And I assume I'm not a leader in terms of day-to-day operations, but I do appreciate the majority of those people in there are good, honest, hardworking people who just want to buy silver bullion and pull physical out of what we're going to talk about today, which is a little bit regarding how the bullion market works versus how the spot price works, and kind of the chicanery that's been going on there for a long time.
So I have a couple questions I want to throw in there real quick, but I was very skeptical when I heard about the whole Wall Street bets movement initially when it came to the equities market and how it trickled over into the silver side of things. And so do you think initially that the whole Wall Street bets, as an organization could have been on social media for quite some time, is it a grassroots movement, or I always anticipate some type of false flag to get the party rolling anyway for those that stand to profit the most off the system being restructured? Right. And so what are your thoughts on the fact that this Wall Street bets might be some big money players behind the scenes under the disguise of these small?
I think what you have is a grassroots movement where most of the people involved are, the one leader, his name is Roaring Kitty. I've seen the guy on YouTube, and if he's like a plant, he's a pretty good actor because he plays the role well, and he does it for hours and hours on end on YouTube. So I don't know what he's getting paid, but you gotta get paid a lot to play that kind of role for a year or two. I think he's real. I think he's legit. I think he is someone who worked and knows a lot about finance and saw an opportunity and used the crowd, to help make his trade, and that's what happened. And it wasn't coordinated to the extent that he could be prosecuted for breaking laws either. I think he played it smart. So, and then I think you have longs too on the hedge fund side who could smell the blood and came in and used that as cover. And I think the same's going to happen in silver and gold eventually. What you're going to have is longs who have been getting their teeth kicked in for a long time by the banks, who eventually, come in a fashion and overwhelm the situation. And that'll probably happen in the precious metals industry. It's just going to take a little longer because it's a little bit bigger than GameStop. But my hunch is it was real, and I think it's what the truth is though is much more complex and much more multivariate than what the narrative is. The narrative is always dumbed down so the average layperson can understand it. And the narrative, the truth of the matter is, only omniscience really knows. Only omniscience will ever know. We'll never know really the truth of it is because it's way too vast.
Yeah, I agree. And so I think the truth will be revealed when everything comes to the light. Now, the light I'm referring to is when a lot of people out here are posting memes about silver reaching $600, or when it overshoots 35, 30. There's all these TA price numbers they give us, but $600 is what a lot of the big the David Morgans, a lot of those individuals say is that turning point in history. And I want to get to that point. So I want to put up on the screen here and let me know, which chart, because you sent me a couple graphs here, but I wanted to show the exponential chart first, if that's good with you. So let me
totally good.
Put this on the screen here, and we can dive deeper and see what we can do here. Let me pull this on my screen. Okay, here we go. So here's a chart that you sent me here. Give us an insight as to this silver
Actually,
index here.
If you got the other one, I accidentally sent you this one, and it's confusing because I think it uses percentage. See if you have one that has dollar value, because that's the key. How much per ounce?
Let me see here.
If you don't have it, I could pull it up.
I have just one other chart, which is the New York overnight versus intraday. So that's the only one I have.
All right, let me try and share my screen and see if I can pull this.
Okay.
if it'll look as nice as you.
Oh no, I'm learning, man. And as always, for those tuning in, man, we have James Anderson from SD Bullion joining us. So feel free to ask some questions, put them in the chat, and we'll dive back a little further. We'll dive back and get some of those questions answered as we move further.
Mike, can you see that chart on my screen?
I can see the chart, but I can see more of us than I can the chart. So
Okay.
I think if you click on the share, you can select which page you want to be visible.
Okay, let me try it again. Sorry.
No problem. And so we have a question. It says, "Hi, Mike and James. I'm confused about the title of your video. Mike, I went to check the silver price and it's doing all it can to stay over 26. Oh well." So we're talking about the overnight silver price going exponential. So I'm assuming that's what people want to dive into. So we're going to get to that with this graph here, which.
Yeah, you know what? Actually, Mike, let's just use the other one. The other one's fine. It's a logarithmic. It's not as it doesn't show how ridiculous and how exponential it's been. We'll switch back when after we're done this one, the other one.
All right, let me share my screen again. Share screen, pull this up. Bam, bam. All right, here we go. So walk us through this if you don't mind.
Sure. Okay, so it's using percentage terms. Starts at 100%, right, in 1970. And what it's showing you, the blue line is simply the it's the price of silver, how it's performed outside of New York trading hours, outside of the COMEX trading hours. Mm-hmm. Every day, you take that data and you add it up, then you take that data and you add it up the next day and the next day and the next day, and it aggregates. So what it shows is, and if the next chart we'll look at, if you've got the other one, it'll show you compared to the other two. But this one is non-logarithmic, so you can see how crazy it's gone in the last 3 years. Mm-hmm. You can see it started really in the start of 2018. 2018, 2019, it really got started going. And then toward 2020, when when COVID got going, I mean, it just went exponential. And that just shows me and my belief that what we've seen on the COMEX in the last year and a half has been they're desperate to keep the price in check, to keep it in line. Mm-hmm. I think they're buying themselves time. But in doing that, on the eastern side of the world, outside of the New York COMEX, the price of silver's gone exponential already. Mm-hmm. But it requires them to go in and do overt, basically drive-by shootings using derivatives and painting the charts downward and trying to keep the silver price in check. Keep it, 26 is usually the launch number anyway for silver. Mm-hmm. If you look back in 2011, when it went off, from like the high teens to 50 very quickly, that's the same. 26 is always the launch number. And so, the powers that be are trying to keep it without getting beyond 30. That's like super important. Once you get it beyond 30, you can really get revving and back toward 50 right quick in a matter of, months. So what you see is on that chart, the blue line is that they're desperate. The last couple of years, it's gone really crazy in terms of outside New York trading hours. Silver, people are really getting long.
Yeah. Now, just looking at this graph here, before we look at the exponential off the chart rise, mm-hmm. It looks like something really began to occur around the 2016-17 time frame, to where that was probably the door opener to where things started to actually ramp up. Off the top of my head, I can't think of any events or whatnot. Was there anything behind the scenes that might have been the reason for this?
So if you think back to 2019, you had the overnight repo loan event that happened in September, and that's really what started this entire thing. I mean, that's when everything that's kind of happened ever since. You have a chain reaction. You have that where that gives a tell that, hey, something went wrong in the back bowels of the entire system. Mm-hmm. And banks aren't willing to lend to one another because they think other banks are bankrupt. It's the same problem that they had in 2008. So they're not willing to overnight lend. So the Federal Reserve has to come in and do that job now. Yeah. And so that's been happening ever since, really. And then you end up having the situation where Powell and the Federal Reserve have to pivot. They have to go back and reverse their policy. And basically, the stock market was freaking out as well. You had a situation where Mnuchin had to call up, and have a plunge protection team kind of kick into overdrive right around Christmas time. Mm-hmm. If that was 2018 or 2019, either way, it's one of the two. My memory's not serving me well, which year that was. But these are kind of the steps along the way to where we've gone. And then when you look at that chart, you can tell once the COVID currency creation got going. I mean, outside of New York trading hours, you can see that the longs are winning, and it's gone exponential, crawling up a wall in terms of percentage gains. So when New York opens, they have to paint the chart hard to keep the spot price in check.
Yeah. Now, what about the 8 billion banks that are, I guess, short, they're shorting silver now, and the whole goal is to protect them. And then we got J.P. Morgan supposedly sitting on the largest stash of actual physical, and them no longer really cooperating with providing silver to the markets type of lingo that's out there. What those eight banks or so, bullion banks rather, if it breaks 30, which you mentioned is kind of the ceiling, I guess all hell breaks loose for them actually probably losing massively and probably going bankrupt /
It's possible. I think this last washout for gold has helped them a lot. We washed out toward the high 1600s. You would have to assume if they were desperate at that point, they would have cut some losses and gotten out. You had a situation, though, during COVID where a lot of these banks got their heads handed to them. I mean, Scotia got a lot of losses. They basically had to sell their warehouse recently to MTB, their COMEX warehouse, and they're trying to back out as best they can from this entire situation. And look, only a few years ago, Scotia was a huge short on silver. I mean, huge. And they bled a lot of losses. They lost, memory serves, close to $1 billion in a short time span when silver ran up pretty quickly in the teens, from the low teens to the high teens in a short stint once. And Scotia, the parent company, was like, all right, that's it. They basically said, we can't have this. You guys are a liability. And so they were trying to sell that entire desk for years, and nobody was buying it because it was a dead man walking.
Yeah.
And so, you have a situation where JP Morgan's the kahuna. They're the gorilla. They have over 50% of the COMEX silver underlying. We don't know if that's what percentage of their house account versus client account, but my hunch is it's probably 60% theirs, 40% their clients. I mean, I just looking, and that's just based off of kind of what percentage of the H versus C category you see on the COMEX files when you're looking through in terms of stoppage. Sometimes it says H for house account, sometimes it says C for client account. I don't do that data every day. I've seen other people do that data, and over like a 5-year span, that was the number: 60% house, 40% clients. So I'm going to assume it's been the same for the last few years. But I mean, there's other questions of like, well, how much silver does JP Morgan have outside of the COMEX over in London? Because they are supposedly they are the custodian of SLV. And, if you've been watching them over the years, they always are withdrawing silver and then sometimes putting it back in SLV. And the question is, well, did they rake a lot of silver out of that over the years for their own house account? And nobody knows. No one knows. There's theories out there, and I don't buy these for a second, that JP Morgan bought sovereign coins. That's bull. There's people who espouse that theory, and I've talked to them personally, directly in public on podcasts, and we talked about it, and I've refuted that. And they have their view, and I have my view, and if someone says interest, just tweet at me, and I can send you that information. I don't buy that for a second. If you're a commercial bank, you're buying 1,000-ounce bars. That's really mainly what you're concerned with. You're not buying U.S. Silver Eagles so you can turn around and sell them when there's a huge premium for a profit. That doesn't make any sense to me. So there was pet theories that people had, and I think that they were built off of assumptions and small visions into actually what was going on in the precious metals industry and market. They were extrapolating based on like only 2 sets of data, how the entire thing was working, and that's just not how you. That's not how you actually study a market. You kind of have to understand who are the largest players, who are their clients, and do that kind of study. And I never saw them do that, so when I heard that, I was like, okay. So it kind of threw a wrench in the entire theory that the people espouse. So
yeah. Now watch this. And so outside of the narrative of the SLV, you have the PSLV, the Eric Sprott, and so everybody appears to be, especially on the Twitter sphere, give me a like or retweet for me, and I'll buy 1,000 shares, or whatever. I'm thinking like, well, damn, people are really, so it's that Wall Street silver bets crowd that I'm assuming is driving that to actually go towards the PSLV. But one of my concerns would be if SLV is used to manipulate the price because it is the vehicle they use to do such, the people, the banks, the bullion banks, the too big to fail, globally systemic important banks, that run this system, at what point will they say, hey, Eric Sprott, we need you to shut this down. We need you to dial back because you're, messing with the game here. So do you see somehow, some way where PSLV, they had to pause on acquiring as much as they, reporting in the
so
physical?
they are. I looked, I think recently, last 4 weeks, they have net 23 million ounces coming in. SLV has net supposedly 41 million ounces going out.
Mhm.
They're winning in the game in terms of who's got net inflows and who's got net outflows. And PSLV is really winning. They're getting a ton of free advertisement, like you're saying right now. I think people are waking up to the fact that SLV is a real unsecured piece of dog s when it comes to a derivative for silver. It's a bad choice. Even if you're day trading retail wise, it's still a bad choice. There's better options. So will they? We've actually talked to Rick Rule over there, and they basically, it's a closed-end fund. Eric Sprott, Rick Rule, guys like that, they basically own that fund. Essentially, they have power over the fund, including the shareholders. And for them to get bought out, it would have to be a huge premium, right? They'd have to get paid like really bigly, largely to do that. They know. I mean, Eric Sprott built this thing with the intention of using it as a battering ram. I mean, he's set up. I don't know if you've ever seen in the last year or two. There's been on Twitter, you can see his Bloomberg panel of like all his various investments that he has made, and it's a 4-part panel. And if you look at it, it's just under $1 billion in value at the moment, but it has the potential to be 15, 20 billion, 30 billion if silver and gold does what he thinks it's going to do. I mean, he's going to be a multi-billionaire. And if you know kind of that type of person, Eric Sprott, he's the kind of guy, like if you remember what he was saying in the early 2010s, he was so bullish silver. He was literally saying, gold 2000s was its bull market, but the 2010s, that's going to be the silver bull market. And that was absolutely the wrong claim, because after 2012, 2013, silver kind of was terrible. It was like a terrible investment for majority of the 2010s. And so Eric Sprott had to suffer through that. And if you think he's going to suffer through that and then not come out this side and enjoy doing what he's doing right now with PSLV, then I don't think you know the kind of person he is. He's a real competitor, and he likes to win. And so I don't see him falling short.
Now, watch this. What's the possibility or likelihood? Of course, this is little tinfoil. Let's hope you don't mind.
Sure.
But the Hunt brothers, also position themselves in a very favorable light in a legally structured manner. And I guess things didn't work out too well for them overall, as far as they've been able to actually keep the physical they had. And so once again, unless Eric Sprott plays by the rules of the game, they could change the rules on him.
Oh, totally. I mean, that's I just did a video. I think I sent it to you about the Hunt brothers. It's a 24-minute video. I usually don't make videos that in depth, but it's a pretty important subject. I think what we have here is Wall Street Silver is excited about silver, and that's cool. That's what most people are when they first enter into the silver industry and silver market. But you need to do a deeper dive so you're ready, because it's a huge war. It's a battle that's gone on. I mean, it's a battle that's gone on since just after the Civil War. The value of silver has more or less been rigged for over 130 years. It's only had a couple brief sprints of time where it's actually gotten to get a run at a free market price or free market value. And so what your point is correct, is that, if there's one place where they can go to pincer in and kind of quell demand, et cetera, they will do it when the time is right. I just think, Mike, ultimately what the situation is in terms of the numbers and the debt and the unfunded liabilities and all this other stuff. I mean, we have the same people behind the Obama administration who are with Biden now in the U.S. Treasury and the melded Federal Reserve. I mean, those guys ultimately know the only way out of this, the easy way out of this, is to devalue the dollar further. And I think to do that best, you have a commodity mega bull. And that's I think what happens. Is the question is like the timing, right? It's like you see them battling silver and gold right now and trying to keep it in check. Don't let it get running away. Don't let it go into a manic stage. And it's probably they're not going to allow that until they have their fiat Fed coin ready to go and their digital situation. And look, that stuff's really, it's right around the corner. I mean, the Bank of England just tweeted out some nonsense today about, oh, guess what we got coming out? It's like, yeah, okay, like. The guy at the head of the BIS, that fat guy, Augustin Carstens or whatever, the Mexican elite guy, he looks like Humpty Dumpty. mean, he's been bragging about the fact that they're coming out with the CBDC for a while now and bad mouthing, Bitcoin. I'm sure they're going to attack Bitcoin at some time when their CBDC system's ready, and they're going to say, hey, look at Bitcoin failing over there. You can trust us. This has always been the contention. Like, so many people for so long have said that, and it just sounded so ridiculous. I didn't think it would ever play out, but it seems that actually may be the way this goes down. But it's probably a little bit out. It's probably still another year or two out before we start really seeing this become obvious. But that is what is setting up right now. It does feel that way.
100%, man. So as I mentioned before, just me always been a skeptic. Blockchain was designed for this purpose, and the Economist cover told us that in 2018ish, the world coin would be ready or something like that, and the infrastructure is definitely there because that's what they wanted. So we'll see. But I want to actually refer back to the video, and then for those that are interested, I'll put that in the chat so people can take a look at it. But just thumbing through some of the pictures here, and I see the different prices, historical prices of different metals here. And of course, silver is lagging behind significantly, nominally.
So is platinum.
What does this tell you? What did you mention about this chart? At this point?
I mean, I tell people, when you look at this chart, it's not to scale. Like, you got to kind of look at it and stare at it a little bit for each different metal to kind of get a feel for, how far it's come. And this is the full fiat currency era. This is 51 years of time. So you got gold, you got silver, palladium, and platinum. Obviously, palladium's kind of front run everything. Gold is going to be the next one to break out. It's already gotten to new nominal highs, but I think later this year it'll again get beyond its old nominal high, and we'll be going toward 2,500 and beyond. Silver and platinum are the cheap ones. I think that if you have long-term view, those are the two you could buy bullion on and kind of set it and forget it for a few years and not think too much about it. There's a case for both. Silver, the gold-silver ratio and spot form is in the mid-60s right now, and in bullion form it's in the mid-50s. And my hunch is we're going below the 2011 low of 33. So, but yeah, just look back at 1980. That was like a pipsqueak bullion market, bullion bull market, and it was run by the Western world, and it was really beginning. It was like the nascent, right before we really fiat financialized everything. I mean, pretty soon we're going to financialize the air you breathe, the water you drink. I mean, that's common. But if you look at the nascent bull market, then you can see all four of them were spiking at the same time. And that's just a decade roughly after we went on the full fiat currency system. And there was huge doubts at that time whether or not that was going to work. And what you had was all four of the major precious metals spiked to new nominal price highs within months of one another. First, it was silver and gold. Then they went down and shut the Hunt brothers down, and everybody in the gold pit was like, "Oh God!" So they slipped off. They slipped off to palladium and platinum, and they created a huge rally there. And you see that spike in the palladium and platinum chart. So it's going to be similar here. I think we're going to have a huge doubts about the currency's value, and I think the government wants that. They want to devalue the dollar, and they want to pretend like, we didn't know this was coming. We just exploded to the M1, 2, 3, and M0 supply, and we didn't know this was going to happen. And by the way, here's your new digital Fed coin that you can use, and you can get your UBI so you don't riot in the street and all this and that. So it's kind of coming, and you can see it slowly moving into view, but it's just so cynical and so ugly, like to have to sit here and say that this is probably what's coming. But I mean, we've been monitoring this for a while, and it looks similar. It looks like what we've been thinking is coming is indeed about to pass.
Yeah, and that's the thing. At the end of every empire, there's chaos, and then there's a rebranding and a restructuring of the monetary system. And it's unfortunate that they're using technology, i.e. the blockchain, as the method to transition us into a digital world solely. And so everything appears to be right on time. I always knew that 2020 would be a turning point. Never thought it would be a pandemic or a COVID type of situation.
Yeah, that was pretty crazy. Yeah.
I knew something. I was always assuming it's going to be war, but actuality it is war because it's the war on cases. It's a global war on cases where the enemy are the people and the weapon of choice is a jab in the arm, man. So it's here. But I want to talk about the availability of silver, physical silver, because a lot of people in the internet realm talk about the scarcity of silver being a little bit harder to source these days, as far as 1,000-ounce bars and certain of your favorite coins may not be available. Get what you can while you can. On the SD bullion side, what's going on the back end?
So at the end of January, early February, that's like the all-time. I mean, that's the most demand our business has seen since it started in 2012. And 2020 was a great year. Don't get me wrong. I mean, the COVID, March, April, May, that there was huge demand then as well, because you had spot obviously dipped down to 12. Bullion stayed pretty high because the demand was so high. It was like dealers aren't dumb. They're not going to sell their remaining supply if they can't get supply quickly, replenish it. And they have to have a war chest. They have to have some profits, or else they're going to have to start firing people in a moment when they have to hire people. Like you got to have Daddy Warbucks to hire like 20 new dudes and train them and have them pick back and ship thousands of shipments every night. So you got to have a premium on the product, or else it's not going to work. So everybody in the industry, you could see this huge protection of inventory with huge premiums, and the same things happened recently as well. It's just the fact is that the demand overwhelms the supply. You have a situation where the bullion industry was going through this sleepwalk, and from 2015 to like 2018, 19, it was the longest stretch I'd ever seen in the bullion industry, where premiums were razor thin. People thought it was like, normal to see silver eagles at 219 over spot. Like that should be the norm. I mean, you understand that means that you have two layers of bullion dealers working on dime profit margins. They were essentially working for free or for loss just to keep their market share. I mean, that's what happened. You starved out the bullion industry. You saw a lot of consolidation. You saw refiners go bankrupt. You saw a huge number of bullion dealers go away as well. And so where we have now is a situation where the window and the door has slammed. It's not as big, and you have demand that's coming in that's overwhelmingly larger than it was prior. And so that's what you're seeing here. You're just seeing a collision of way too much demand versus the supply. And the fact that, look, bullion dealers know this. They have when it's hot like this, they want to try and make as much of a war chest as they possibly can, because they're afraid that they're going to go through another 3, 4, 5 year starving cycle. I don't necessarily think that's the case. I think what you're going to see is you're not going to see $2.29, $2.19 over spot American silver eagles ever again. I'm sorry, that ain't coming back. What you're going to end up seeing is what you're already seeing is silver eagles almost at $10 over spot. For 1 ounce. And I think get used to that, especially as you have spot run toward $50 and $60 and $70 an ounce. If say you have $70 spot silver, you're going to be buying silver eagles in the 80s.
Yeah. Now, what I want to say is I made a prediction. Oh, it's not much of a prediction. To me, I consider it common sense. But at this current moment, given the tight pressure on getting physical, and people being exposed and realizing the paper game and the actual nominal price of what you see when you look at your screen, there's a disconnect. And let me know if you agree or not. But I don't think we'll never see silver below $30 an ounce physical in your hand from a coin shop or dealer or anything like that, regardless of what they do with the actual spot price. Even if we have another March 2020 event where it goes down $11, I could see a $19 premium, because bullion banks and they're not willing to get rid of it.
I'm in agreement with you in terms of the retail price right now. Like on a wholesale lot, if I went and bought, say, 5,000 ounces of silver, I could get it just under 30. But you're right, on the retail level, you can't find silver below 30. And it's an asymmetric bet. It's like you're looking at the situation. You're looking at that chart that we looked at earlier, where outside of New York, the thing's climbing a wall. It's telling you that the rest of the world is like, buy silver. And the only thing is, it doesn't make sense. It's giving you cognitive dissonance, because the spot price is telling you, no, it's only worth 20, 25, 26, and it's going down, and it's, whatever. Silver's nothing. It's manipulated, so give up. That's basically what it tries to tell you every day. It's this operation of cognitive dissonance. And you essentially have to know that, all right, the government they have to devalue the currency. They cannot deliver on over 28 trillion in debt, hard debt. They can't deliver on the unfunded liabilities, which is probably over 200 trillion if you add it all up on a real basis. I mean, what are you going to do? You're going to go invent a time machine? Are you going to invent a new energy? Are you going to invent something that creates this new paradigm? Because blockchain is not the new paradigm. That's not going to create any wealth. All that is just changing the chairs on the Titanic, essentially. I mean, the way they get out of this historically is to just devalue the crap out of the currency. And we're not headed for a hard default, I don't think, on a sovereign level. You'll see defaults all over on the private level. But on the sovereign level in the United States, the reserve currency, historically, when the reserve currency is dominant and it loses its dominance, it loses it through high inflation. Just look at the fiat British pound after it cut itself from gold. I mean, especially in the 70s, that thing went sky high in inflation. So that's my hunch, is later 2020s, 2030s, you're going to have horrible inflation. And you're going to have a situation where people are desperate and they have to have handouts from the government. And the government loves that because then they can rule over you through tyranny and control.
Mm-hmm. Yeah. And to that, a couple of things I want to throw in there about, the British pound. And so just recently, the UK announced that, expect negative rates. Expect the UK central bank, their bank rates to go negative. And I'm thinking like, man, 100 years ago, they were a world reserve currency. And to look at what has happened to them over the last century as computerization of digits and debt and, all these paper products they've given out, as they're losing control, their economy is going negative, therefore defaulting on the citizens. And then in regards to the inflation you mentioned, I'm thinking like destruction of the purchasing power is a default on your savings, your retirement, everything else, because you are the loser. Those that hold those instruments are losers. So that is the ultimate default directly in your pocket. And so
well, when gold passes 2000 again, remember that, since the Federal Reserve has been around and, gold passes 2000, that means that gold has lost over 99% of its value versus the old $20.67 per ounce. That was what our forefathers used for long ass time. And the United States was built on that. And that's what made the United States really, really powerful as an economy when it burgeoned out of early 19th century with the robber barons and then turned into an industrial powerhouse. It was built on a foundation of solid money.
Yeah. Very true. And actually, let me see. I got a little visual aid here that I think I could piggyback off that idea if I can find it real quick. And then we want to get to some questions and then go from there. Let me see if I can get, because it's a visual aid I came across that I wanted to do a video on. Didn't get a chance to get to it. Let me see if I can find it real quick. I think if you haven't seen it, you'll probably. Where is it at? Let me see.
I think I saw it the other day. You had a big visual aid that you were jumping back and forth on. That was
yeah, that was in regards to it. Okay, here it is. So let me grab it here. So this is just, I grabbed this off of the internet because it belongs to somebody posted it in their Medium, but I thought it was relevant to the discussion, especially this current moment.
Sure.
Because I didn't get a chance to do a video to it, but this plays right into what we're talking about here. Let me pull this on the screen so people can see it when it pops up here. I should have had this ready, but this is impromptu, last minute. Didn't have this plan. I'll put this on the screen here, but it's this visual aid right here. And so there's so much this tells me whatever, but it plays into what we're talking about, how over time, all these events have basically led to the government needing to further expand the monetary base, therefore taking the purchasing power down in gold and silver terms, similar to the Roman Empire.
Sure. Yeah.
And the very last one is the war on COVID. So
yeah, this is interesting. Yeah, you got so the yellow line is Britain and the white line is Rome, the Romans. Because people look at Romans and they always think, man, that took hundreds of years. We got time. US will be fine. It's going to be a while before but you can see Britain. I mean, that's one lifetime essentially.
This is America. The yellow is the American.
It is. Okay.
And then the silver is the Roman denarius.
Wow.
And so, but one thing is, this is a 105 or 106 year time frame where all this happened for Rome as well as the USA under the Federal Reserve Bank. So this is just something I thought
we're moving faster than Rome.
Yeah. And there's this gradual over time. And the thing is, during that Roman time frame, they actually still had something real, even though the coin was being clipped away to nothing and being debased as far as adding all the extra metals into it. But they at least had some metals. We got paper and digits at this moment. So, interesting.
Yeah, it goes with there's huge ramp up in population, right? This past century. So there's a few different little twists and turns in it. But the good news is, at least now you can still get some type of precious metals and some type of things that are really going to last. For certain generations down the line, those aren't going anywhere. They're going to be worth something. In terms of platinum, gold, silver, all three of those are needed for us if we ever want to go interstellar. If we ever really want to, if we really want to advance as a human society, we need those. Those three precious metals are key. And they come from star supernova. They don't come from some jackass over at the central bank who says, we should have more of this stuff, or somebody writing some code. No, man, it comes from the most violent thing that we humans have ever studied. It's a star supernova, which is incredible, and it is very hard to find. You look at how difficult it is for miners from the very bottom to all the way to the refiners to the bullion dealers. we're lucky we get to sit at the clean top of the pyramid a lot of times and just hand it out to people, as long as they pay us a little premium in fiat currency, and we can go around and do that for a little profit margin. But man, I mean, the scale and effort that it requires to pull this stuff out of the ground is tremendous. And I'm sure your listeners know that. So it's just something that it makes my mind reel, in terms of the difficulty to do that versus just pressing a couple keyboard buttons.
Yeah, exactly. And I'm not beating up on blockchain, because there's a lot of good, but there's more bad ultimately, I believe. And the idea of sitting in a computer and creating code to try to create the monetary properties that resemble gold and silver, there's no replacement, because once again, the whole blockchain concept, the way it's been evolved to this current model of, it was initially to free us from the banks, but now we're waiting on banks' permission to reap the rewards and the profits of it. So that's over there.
You have Ripple and Stellar both underlying these CBDC, different efforts to try and create, and Ripple has been around a long time, but they're using that technology for the CBDC. So I think you've done a lot of good work on that, actually. And it's obvious that they hijacked a lot of brain power and basically used it for their own purposes. And technology can be great and technology can be bad. It's just a question of how you use it. Right. Also, when it comes to money, remember, every mankind money is fallible. It always goes to zero. In the end, every one of them that's ever been created, I don't care what currency it is, if it came from mankind, it is fallible and it will fail. Ultimately, that's where it goes. So you can think, the latest, crypto or this or that is so great and incredible. And it's cool to have settlement fast and be able to cross borders without any friction. I think that's totally understandable. I understand that there's a lot of great things about it. But you got to remember that the next one's coming, and that one will be passé. The next generation won't give a crap about your latest crypto, But they will have to give a crap about Bullion, because we're going to need it if we want to advance as a society.
Yeah, and here's a little something else, and then we'll get ready to dial back. But I want to get your thoughts on, here's an article here. Let me know what you think about this. Man arrested trying to smuggle 28 million baht in gold across the Burmese border over in the Mandarin area, I think. So once again, so people might say if he had Bitcoin, he could have got out the country no problem.
It's going to get crazier and crazier with time in terms of smuggling with bullion and payments and planted stories about narco trafficking using it. I think the threshold between $100 bill weight and the gold weight is about $3,000 an ounce. Say you get around $4,000 an ounce, you may end up having Mexican cartels paying one another in gold bullion instead of $100 bills, because it's just easier to carry it around. It's not as heavy. So I mean, it'll get to a situation where they start using that as a way to clamp down, as an excuse, et cetera, like 90 some odd % of all of the crime that ever happens right now in the United States, in the world, is being used with, U.S. fiat Fed notes or with fiat euros. So just keep that in mind whenever they run that stupid mind trick of saying that, it's for crime that people use bullion and precious metals or cryptos. We all know that that's a red herring, and it's not true. In the true scale and size of criminality, it's fiat cash notes that are used the most. But, if they're clamping down on fiat cash notes, like we think, Mike, they're going to have to go somewhere else. And so what you're going to end up seeing is a confluence of the black and free market. There's been dystopic movies about that kind of stuff who've been written. What the hell is it called? It's called Loopers. It's a dystopic movie in the future called Loopers. And Loopers, or I think it's plural. And it's a dystopic movie in 2074 in China. It kind of bounces back and forth from various time frames. But the one mistake the writer made is that the Chinese yuan is still a cash yuan note in 2074. That thing will be gone by 2034.
Is this an old movie?
No, it's not that old. It was I think 2012, 2013. It's a good one. It's got it's violent. So, beware if you don't like violent action films, but it's a violent dystopic movie. One mistake they made was thinking that there'd be cash of that size in 2074. I mean, if there's any cash, it'll be very tiny. But I do worry in terms of that there it is. I do worry about that policy. You got to remember, Mike, we could have a situation where the digital grid just fails completely. Yeah. If the sun has a problem, if we have something hit, and just so we can't put all our eggs in one basket. It doesn't make any sense. I don't understand why people as humans, we get all enamored about one thing and we just want to run head first all in on something. And we forget about the past. What was the tried and true? What worked for so long? And so you got to keep some insurance, man. You got to.
That's true. So if you don't mind, James, you got a couple minutes for a couple questions, and we can get them.
Sure.
All right, so let's open up the open up the phone lines, but that'll take forever. So if you got some questions, just throw some questions out there in the chat. Highlight at Rethinking a Dollar. Definitely share your 2 cents on what we've been touching on, and ask any questions in particular. We can touch on those. So I'll thumb through the chat real quick, see if anybody left anything for us. And
meanwhile, I'm going to share my screen meanwhile, just to show that chart we were looking at earlier.
Okay.
Give them a little bit better look, because this
and
one.
Then also, as you're doing that, one of the points I also mentioned is that right now, despite whatever the spot price is for us here in America, and every other country where the fiat currencies are already experiencing hard times, the actual ability to go get physical and gold and silver in other countries have already surpassed their all-time highs. Letting everybody know the importance really of getting your weight up, because once again, it's only a matter of how many units of paper can you use to actually acquire something physical, and it's going to continue to go up as the monetary base is expanded. So
that's for sure. I mean, the one thing that we are lucky right now is that the fiat Federal Reserve note, and most of us get paid in that. Mm-hmm. We are very lucky because it's been very strong in the last 6-7 years, and you would not believe in Panama, like the amount of service and goods that you can get and various things. I mean, like a haircut for 5 fiat Fed notes. I mean, like a really good haircut, someone working for an hour, and they're thrilled to get 5 fiat Fed notes. I mean, people work their butt off here for 25 fiat Fed notes a day, and they feel like that's a great wage. I mean, that 25 fiat Fed notes in the U.S., you better be making that an hour, or else you're probably going to be living in tough sled. Yeah. So here's the chart that we were looking at earlier, but this is not this is logarithmic, so it takes a percentage basis. So let me real quickly give people an idea of what this is. This is the full fiat currency era, 1970 to 2021. The red line is the price of silver every day that the New York COMEX opens. And so you could look at that and think that's the spot price, essentially, over this 51-year time frame. The black line is the intra New York open to New York close price. Like, for instance, if you had bought on the New York open and then sold on the New York close, that's what you'd have left after 51 years. Look, man, it starts at $1.92 an ounce, and now it's down to 21 cents an ounce over 51 years. Wow. That's if you went long right at the beginning of New York COMEX and then sold at the end of New York COMEX. Now, if you did the reverse, the blue line is the one that's gone absolutely nuts of late, right? Mm-hmm. You can see how the blue line mimics kind of the spot if you look up. But that scale is huge on the blue line versus the red line. I mean, the red line is only showing you 12 to 30, whereas the blue line is showing you something from like, I don't know, say 90 roughly to, over 200, 230 almost. So it just shows you that the scale of people going long outside of New York hours is there. And the only question is, when are they going to kind of stop defending this phony spot price and see the black line, how it went up through that time frame in the late 1990s, early 2000s. There will come again when that happens. When that happens, you'll see the blue and red line again rest on one another. And when the blue and red line rest on one another, that's when you start taking out some of your silver and selling it for other assets. That's just that's like the time frame when it made sense. Looking back, that's always been a good time frame to start disgorging some of your silver holdings and moving into other asset classes. So that blue and red line are going to meet again. The only question is, will Nick Lard's website be around by the time that happens?
Wow, this is some detailed stuff, man.
Sure.
All right, so let me see if we got any questions here, and then we can keep it moving. All right, so everything about can James say if there is a true silver shortage, or is there just a backup and delivery from the refiners?
So a true silver shortage, the way I define that is, some people define it as being like flat out, you can't get 1,000-ounce bars. Mm-hmm. That's not true. I mean, you can get 1,000-ounce bars, but it's not easy. And you have to pay a premium. You have to use brokers if you're pulling them from the COMEX. I think right now you can get them using a brokers for like $1.25 an ounce. I personally not gone into it, but I'm sure we will probably go down that rabbit hole very soon at SD Bullion in terms of coming up with a method for getting it even less than that out of the COMEX. But it's not easy. I saw an anecdotal piece of written by somebody who's trying to take, I think, 4 contracts, so roughly 20,000 ounces out of the COMEX the other day. He had it in 3 different warehouses, and they all had their own policies about how you pull it out. You know, he's trying to call Brinks for one. Brinks is not calling him back. He's trying to have UPS ship the other. Like, I mean, and look, we don't deal in 1,000-ounce bars because they're not homogeneous. They're pain. They're not 1,000-ounce pure. If you did it on a retail level, it is an absolute nightmare because one is 962.3 ounces. One's, 1,032 ounces. So they vary a lot. Yeah. And so that's why typically when, if you pull them out of the warehousing system, it's difficult to A, liquidate them for a decent price, and then B, like ship them anywhere. It's just the whole thing's they're made for industry. They're not made for retail investors. Yeah. So let's get back to the point. The point is there's anecdotal evidence and there's also factual evidence. I mean, the LBMA's float that they have out there, I think the last time I saw Ronan Manley, he said it was something like 150 million ounces. So, let's assume it's gone up a little bit of late, because you probably, let's say it's 200 million ounces. 200 million ounces of silver. I know it sounds huge, but it's not that big. Like 200 million ounces of silver is what India would take on average, roughly every year in the 2010s. And India has not been buying silver since COVID, really. I mean, they've gone kind of quiet. Yeah. And when India...
Now that's very surprising, isn't it? Like that's not normal, given the fact they're definitely heavy gold. But I know silver's been a big part of their game plan. So I
think recently there was I think I saw something about 80 metric tons got taken out of their exchange recently, and I'm not sure if it was one guy who pulled it or not. But 80 metric tons sounds like a lot, but I mean they would average over 1,000 metric tons every year. And if you do the math on it, Look, I think it was 177 million ounces every year on average in the 2010s, and they've only been pulling like 10, 20 million ounces since COVID started. I mean, nothing per year. Like they literally, if you look at the chart, it just goes down and there's nothing there. But they'll come back. I mean, India is a burgeoning society. They got a lot of wealth there. They got a burgeoning middle class. Those folks are going to want to have silver, especially if gold starts running away from them. You're going to see poor man's gold play out right in front of your eyes. Yeah. So my hunch is they're coming back. The question is what's London going to do? They only got like 200 million ounces, and they got these phony ETFs over there, the SLV and the SIVR. They changed their prospectuses saying, hey, if this Wall Street silver thing comes up, hey, it's not our fault. Like, basically telling their shareholders, like, screw you. I mean, it's amazing what's happened in the last few months. So, the idea that is there a real shortage? Yeah, there's a shortage. It's building. It's happening. It's going to take years probably for it to really show up in the spot price and go exponential like that blue line showing up. Yeah. But it's not, I mean, it's coming. I mean, you have this trend building and you have all these people buying PSLV and people leaving SLV. That's good. And you have the retail trend happening. I just think, it's coming. I don't see how this stops. Yeah.
Now, and here's a question here, and we can get ready to dial back. And I appreciate that, Curtis, that super chat there. Thank you, William Curtis. It says, $3 million, what event would trigger the silver price to break loose of bank manipulation like 2008? And so to add to that, the reason why I mentioned that is because do you think it will take another globally systemic style event for everything to break loose and then to lose control? Or is the paper rigging game so strong that they'll probably pull a rabbit out the hat and figure out how to dump some contracts out there last minute and make sure it never goes beyond that 30 or 50 or what?
As long as you have a consciousness and understanding, not just from retail, but all the way up to the high net worth level traders and high net worth family offices. As long as there's a building and growing understanding, and there is, of you've got to take bullion and have it directly owned outright. It's not happened yet. I have not seen it happen yet, but the high net worth family offices, those people have bullion. They've been coming into COMEX buying bullion in the last few years, and they have a lot of it, but they keep it in there like morons. They don't pull it out. They need to pull it out of the COMEX system, take it out, and have it in their own segregated direct storage account with the Brinks, with the G4S, with the, but that's coming. They're going to learn that mistake because, I mean, COMEX is under duress. They're under a lot of scrutiny. I mean, anyone who bothers to even look, if you do a search on YouTube or Google, I mean, what's coming up is scrutiny, not like, everything's cool and sanguine. No, scrutiny for SLV, SIVR. If that keeps happening, you're going to have other people freak out and rightfully so. I mean, rightfully so. They should go and pull out the counterparties that are risky and that are not worthy of your safest asset. So, yeah, I think it's happening. I think the trend, one skill I've always had in my life is kind of being able to see a trend. I usually was way too damn early, but the bullion thing was way obvious. It's just the fact that the derivative market could stretch it from the 2008 global financial crisis, where they essentially said, time out, we're going to paper this thing over, to where we are now, where, it's starting to come undone. What I think is ultimately the silver squeeze is going to lead to a bullion gold squeeze. You're going to have everybody freaking out about where's my gold, and people who have been sitting in all these fake gold storage accounts in London, all these banks that have all these local London gold storage accounts, and they have people who are high net worth with their 5% gold allocation in this thing. When those people say, hey, I have to have bullion, or the bank has to do it because of Basel III or what have you, you're going to see a big transition, I think. And so ultimately what leads to a shortage and a squeeze ultimately is fear, not greed. Okay. And fear is coming, I think, because you have banks that have to go under, or they have to get merged and bailed in, et cetera. So there's going to be another event coming up, and it's going to make 2008 look like a joke. It's going to be big. And the only question is exactly what's going to set it off and how it's going to play out. But in order to get this whole system into fruition, which is going to be probably a combination of IMF SDR level, fiat CBDC on the local level, that's going to be your two, that's going to be the pincer attack to, kind of keep everybody in their little, farms and stuff, and keep citizens under arrest by their governments. But I think that's what's coming. And how you get there is you probably get there through a huge crisis. And look, man, the banks are insolvent. There's a ton of them that are already insolvent. It's just a question of when they say, all right, we're insolvent. Sorry, we're not really solid. We've been using this mark to model system for a long time, and if we actually mark to real market, a lot of these banks have flagrantly they've been acting as if they're above board. That they are. I think a lot of them are not solvent.
I mean, there's no way you can be solvent when you got rents and mortgages and credit cards and all these debts that have not been paid upon, and government stepped in and say, don't pay it now, kick it down the line and pass the stimulus bills to further kick the can down the road. It only adds up. And then you got all the back rent, back mortgage, back this. It's not coming back. So James Anderson, man, as always, it's great to connect, man. Have fun. I can go on forever, but I know that, we got to keep moving on, man. But thank you once again for joining us and sharing your wealth of knowledge. Let me actually put your Twitter page up here so people can find out how to connect with you directly. If you want to, feel free to go check out Mr. Anderson. Add it to my screen here. He's over on Twitter, _ is @JamesHenry, and then also sdbullion.com is where you can find him on YouTube. He put up videos. You do daily or?
No, I probably do 2 times a week. I make videos for SD Bullion, and so SD Bullion's YouTube channel. That's mainly where, and then this Twitter page. That's where you find most of my work.
Okay, good deal. Well, once again, James, it's great having you on, man. I always love hanging out with you and getting a chance to connect with you. So once again, guys, if you enjoyed this, give it a thumbs up, share this. Definitely, this is information that really highlights the manipulation and the criminality behind the rigging of the metals price, because silver, I'm assuming you would agree also, silver probably is the most undervalued and under talked about, if that's a word, metal of all times that every American should know about if they want to really protect themselves outside of what we've been steered towards in a digital distraction world. But anyway,
Milton Friedman said it's the all-time human money. I mean, and we've forgotten that. We're gonna have to relearn that lesson. So
well, James, stick around for 1 second as I sign off, and everybody look forward to connecting with you again later on today for another live stream. Be blessed, be safe, peace.